Okay, you want to get involved in investing, but with all the information out there, you're confused as to how to start. Well, don't worry, in this video, I'll show you how to start investing, what it is, and how much you can potentially make or lose. And trust me, I'll be truthful instead of flexing my Lambos as most traders do. Now, before we get into the good stuff, why should you actually invest? Isn't a job sufficient to make you enough money to live a good life? Well, looking at the current economic situation, I'm sure you can tell it's definitely not enough. There was a time when things were cheap, but there has been this silent killer that's been cutting holes in everyone's pocket. Yep, I'm talking about inflation. It has been at its highest in a very long time. Now, one of the ways to counter inflation is investing it in things that can make you more money, which will not happen if you keep your money in a savings account, because most banks will give you less interest on your savings account than the average inflation rate, which means your money is actually losing value while it's sitting in your savings account. So where could you invest your money? Well, there is a number of places such as properties, stocks, bonds, mutual funds, Rolexes, crypto, artwork. I mean, the list goes on and on. But here's why I believe investing in stocks is the best option at the moment. Let's start off with property. The average cost of a property in London is around £523,666 as of 2023. But even if you manage to save up the deposit, the monthly mortgage payments will kill you due to the current mortgage rates. As of recording this video, the current average mortgage rate for a 5-year fixed 85% loan to value mortgage is 5.73%. So let's say you put a 15% deposit on a £550,000 house, which would be £82,500. You manage to get a 25-year repayment plan for a 5-year fixed 85% loan to value mortgage of £467,500 at the current rate, which is 5.73%. This means you would be paying £2,935 for your monthly mortgage payment. Moreover, in property, you would need more money to get more in return. I know a few investors who have multiple properties, but the rents they get from their tenants all goes into paying off the mortgage and other costs, while they take around 5%. That was property. Now let's move on to the most riskiest investments, crypto and Rolexes. Starting with Rolex. Now I love Rolexes. I have one myself because they're pretty cool and they look aesthetically pleasing and show status. However, the increased return is pretty poor compared to the risk you're taking. They can easily be robbed. I mean, you will never see me with a Rolex in the streets of London because of the robberies that take place. So is it worth endangering your life for a low return? I don't think so. Now, crypto is a different ball game. It is similar to stocks, but the problem with crypto is that it hasn't got an established backing yet. Many crypto projects were simple scams like Celsius and SafeMoon. Many projects were simple pump and dumps, and millions have lost money, such as the recent collapse of FTX, where billions vanished overnight. The crypto market is slowly increasing again, but I deem it a high risk as a coin can always fail overnight. Instead, investing in stocks is a better option in my opinion, as companies are less likely to collapse overnight. But what is a stock? Well, a stock is simply a slice of the company that you want to buy into. For example, Tesla, as they needed more money to grow their business and expand, they simply broke up their company into several pieces and sold it to any bidder who bought that piece. But in simple terms, a stock is just a piece of a company you have. Now that can either go up in prices depending on how well a business is doing, or it can come down depending on how bad the business is doing. But overall, most businesses tend to do well and their investors get a high return. For example, look at McDonald's share prices. If you bought a stock of McDonald's in 2020, the price was £148 per share. But now you would get £295 for the same stock. But overall, most businesses tend to increase over time. But hey, you never know, so always do your research and use risk mitigation tools like stop losses. This isn't the only way a stock may pay off. Some businesses pay dividends. A dividend payment is simply the distribution of a company's profit to its shareholders or stockholders. For example, let's say you buy 100 shares of company A for $10 each. You have invested a total of $1,000. Company A pays 30-cent annual dividend per share of stock. This means over the course of a year, you will receive $30 in dividend payments. It's more, but hey, if you hold a lot of stock, that can be a lot. Now, obviously, you won't always get dividend payouts as businesses may not always make profit. You now know what a stock is and how a stock works and how you could make money off a stock, but what is the actual process of getting your first stock? Well, here are the steps. Firstly, you want to establish that you have an emergency fund, essentially money saved up for around 3 to 6 months, which will cover your cost of living if anything goes south, as it's best to avoid debt, because once you're trapped in it, it's really hard to get out. Secondly, you need to make sure you pay off any high interest debt, such as your credit card debt or any loans that you have. Once you've done this, all you need then is a broker like Trading 212. Now, Trading 212 is a well-established broker that allows you to invest in stocks, ETFs, and much more. They've been around for so many years, and I actually started using them back in 2020, and they're also trusted by millions of other customers. All you have to do is create an account, which you can do in a matter of minutes by filling in your details. Once you are inside the app, as you can see, it is easy to navigate and find your favorite companies to invest in. For me, I love Tesla, so I just have to click on it, add funds, and then click buy. And now I can proudly say I own a piece of Tesla. Anyways, that's how you buy a stock, and you can do the same by signing up with Trading 212 and get your first stock. And also, if you use the link in the description, you can get a free share worth up to £100. So make sure you use my link when signing up. Now, obviously, investing isn't as simple as this. There are certain strategies that you can try out and see which one suits you. Trading 212 provides you with income statements, balance sheets, and cash flow data on companies you want to invest in, so that you can carry out proper market research before buying the stock. This is another reason why I would recommend them to you. But hey, if you don't want to risk all your money in one stock, here's a better alternative. You can invest in ETFs. They're basically a group of stocks that are bonded together, so you don't only invest into one company, but multiple companies. I'm sure you've seen videos of an index fund called the S&P 500. It assumes that investing in the S&P 500 40 years ago would guarantee riches, but some people might have lost money. It also depends on how much someone invested, whether they held it for 40 years and were able to hold their positions open when the market crashed. But if you want to just invest in individual stocks, it's best to diversify your portfolio and go buy stocks from other industries as well. My rule of thumb is always invest in things you believe in. For example, take McDonald's for example. That brand has been there for years, and with the new Gen Z takeouts and quick meals have been the go-to instead of cooking. So I believe the stock price of McDonald's will keep increasing because of the demand increasing. You can also watch this really cool video by Beheza, who took advantage of trends and how he made money by studying the latest trends. This is another strategy used by many people when it comes to stocks. For example, when Meta released Threads, it got over 10 million signups overnight, which shows significant success for the company. And some traders took advantage of this, and prior to the launch of Threads, they actually invested in Meta and they made a good profit as the stock price went up from 291 to 309. So this is just a few ways you can take advantage of the stock market. I hope you have understood stocks better and know how to purchase your first stock. Once again, don't forget to sign up with Trading 212 using the link in the description, as you can get a free stock worth up to £100. I'll see you in the next video. Take care and peace.